Well, financial markets, we're expecting an announcement of a 0.25% reduction in the official cash rate out of the Reserve Bank today, and that's exactly what's been delivered. So the official cash rate now down to 3%, so that's a reduction of 2.5% since the easing program kicked into gear July 24. So 3%, good news for homeowners, good news for borrowers alike. Well, certainly any alleviation of the challenges of household cash flow pressure is good news, and the softer interest rates is certainly that. We've already seen some of the banks jockeying for position around softening some of their interest rates over the past week or so. So some of that 0.25 has already been baked into some of that change. Around 0.1% reductions southwards have already been seen. So hopefully we'll see a bit more off the back of this change over the next week or so. Well, we all know that softer interest rates, they're good for business owners, they're good for the property market, and they're pretty good in general for the wider economy. So even if there is softer interest rate settings still to come, it does pay to pay a bit of a lens to what the future settings could look like over the next year or so and beyond. And that's where we're starting to see that old beast, our inflation friend, possibly kick back into a gear again. So do remember that over the past few years, business owners have really been challenged. They haven't had the ability to pass on some of that increased expense through their product pricing into the marketplace. So pretty much all businesses in New Zealand are now thinking about how can we position to do just that. That is going to have its own bearing on inflation. It's going to have its own bearing on our own cost of products and cost of goods throughout New Zealand. And that should have some lens towards interest rate adjustments from the future from the Reserve Bank. So that's not great news, but it's something we need to have a bit of a lens on to help make our own decisioning and our own pricing strategies around our interest rate settings. Well, for the team here at Haven, we're fairly conscious that a lot of people have a lot of views around what the future looks like, but no one really knows. You can read the tea leaves as you see them on the day. What we're really seeing is some really strong developments and nuances from our clients in terms of the decisions they're making around refixing their lending. So no longer is it the old rinse and repeat 1 year best rate fixed rate play. Some of it is now being split into multiple tranches to hedge some of that risk around what the future could look like. And conversely, longer terms are also being played more rigorously as well. So each household setting is really different. Each of the risk settings and profiles for individuals is different as well. We love getting amongst that stuff and helping our clients make decisions, and we'd love to hear from you. Many thanks. Have a cracking day. Cheers.